Hello, traders. FX Pip Collector here. Today is Sunday, May 4th, and this is my full top-down analysis for the Euro US dollar. If you haven't done so yet, definitely do check out my free Discord group. It's a link down here in the corner at the end of the video, and make sure to check out my website, fxpipcollector.com. Watch the video on the home screen to learn more. So otherwise, the euro dollar on the monthly time frame has been extremely strong, as you can see. Now, I personally think this is an expanding flat. It seems really, really clear to be an expanding flat because it made one, two, three waves down with a lower low, lower low. Now I think we're going to end up making one, two, three, four, five waves up for a wave C, which most likely will take out all these highs, potentially putting us all the way up to, maybe even the 1.25 to 1.3 area. Very, very, very bullish. Now, I do have an alternative view, which is that this move up right here could be A, B, C to the last wave down. Even if it is an A, B, C to the last wave down, I would expect it to go to the 78%, make like that double top on the sort of time frames and a break of structure, proving that it really is going back down. So either way, let's go down to the sort of time frames. So either way, the trend is definitely still up on this time frame. We do not have a break of structure. We do not have a lower high. We have no reason whatsoever to think that anything we see to the downside is nothing more than a correction to the uptrend. If it is really a wave C, then it would go up to the 78% break structure, then that would have to turn us bearish. If it's the bigger wave C, the expanding wave C, then it might still bounce from the 78%, but it wouldn't break structure, and it will just keep on trending, making higher highs, higher lows on these higher time frames. So taking it down to the daily time frame. So on the daily, we definitely do have a pullback forming, as you can see. More than likely, this pullback is a correction to the last move up right here. So we got our Fibonacci retracement on there. A pullback can go anywhere between 38 and 78%, which is obviously a very big range. But as this pullback plays out, we should be able to recognize what it is in Elliot wave terms, like a traditional ABC like this, or does it turn into some sort of a flat or a triangle or a WXY or what? Doesn't really matter to me because as it plays out, I'll start to be able to recognize what kind of a correction it is, and we'll be prepared to go long at the end of the pullback for the continuation of the uptrend. Just keep in mind this is the daily time frame, and if it is making a proper pullback, then more than likely it's going to take several weeks. Going down to the 4 hour time frame, we definitely got impulsive down, as you can see. Kind of an odd little pattern, definitely. I mean, I still think there's a pretty good chance this could go up and make like an expanding. Kind of looks like 1, 2, 3 up, down, 1, 2, 3, 4, 5 up, and this would be like the A. This would be like a wave B, like an expanding ABC of B, and then potentially down to maybe like the 50 or the 61% for a wave C. As of right now, I think this is how this ABC correction or this pullback is going to play out, but it definitely could change as time goes on. So, anyways, keeping that in mind, let's go down to the 1 hour time frame. So, 1 hour time frame, we got a huge impulsive move up on Friday. We do have a break of structure also. Then it pulled way back. Now, there's a chance that this just keeps on going down, and since we are in a pullback on the daily, I would be recommending shorts right now. But I think there's a better chance that this is going to probably make a higher low, and probably make like a 1, 2, 3, 4, 5 waves up for a wave C before it actually does end up continuing down. We have interest rate this week for the US dollar, which seems like it would be a really good opportunity perhaps to go short at the end of a wave C, which would most likely be the end of an a B, a B, and a C of wave B, because this over here would be the wave A. So you'd have your wave A, wave B, and then eventually down for the wave C. So anyways, don't forget to like and subscribe, and as always, thank you for watching and happy trading.